All right. All right. I think we are ready to kick things off. I am Melissa Garrido, your host today. First and foremost, I would like to thank all of you amazing guests for attending, and of course, our distinguished guest today, Jack McGowan. Thank you for joining us on this lovely Wednesday afternoon. So a reminder, the session is being recorded, and please, if you feel you want to ask some questions, our Q&A or the comment box is available, or you can wait till Jack is done with his presentation and we can do a live Q&A session at that time. Jack McGowan, thank you once again for your time today. As a project manager at Insight Consultant, as well as director of Western New York Venture Association and Buffalo Angels. Today we have the pleasure of learning the necessary content of an investor presentation and how to communicate key points that investors particularly want to know and need to know when they're evaluating and making these investment decisions. So without further ado, thank you so much. And please, Jack, the virtual floor is now yours.
Great. Thank you, Melissa. And thanks for everybody. Thanks for joining today. Pleased to be with you. So as Melissa said, through my work at Insight Consulting, I serve as the director of the Western New York Venture Association and the Buffalo Angels. The Western Venture Association has actually been around since like early 90s. And we have meetings every 5 a year. We had one this morning. A couple of companies will pitch, and it's open to the general business community. So it's really more kind of a networking and exposure and practice kind of a meeting. Whereas the Buffalo Angels meetings meet monthly. Those are limited to accredited investors, high net worth individuals who are looking to potentially invest in local companies. So over the years, I've seen a boatload of pitches. And I've worked with the companies to try to help them to be prepared so that they can have the greatest possible chance of hopefully finding the right fit with potential investors. So I want to share with you today both kind of a pitch 101, the basic elements that investors want to see in a pitch, and give you some tips and some advice as well. So. One of the important things, because often as people say, wow, I want to get that perfect pitch. How can I? In fact, some people when I give this presentation other times too, and can you talk about the perfect pitch? And there is none. It depends on who you're talking to, because what different types of investors need to hear different things, and also they invest in companies, not in pitch decks. So, you can have even, the greatest pitch doesn't mean you're necessarily the greatest company and you're likely to get funding and be successful. Another important thing is that, it's basically, it's all about communication. And, the University of Pittsburgh, the experts there in communications, effective communication takes place when your listener, in this case, it's those potential investors, understand the message. And so many times when a company is pitching, they obviously, it is about them to a big degree, but they're presenting it from their perspective as to trying to get an appreciation about what do investors need to know and what will they understand. That's why one of the key takeaways today is keeping that audience in mind and that investor in mind, and they are different depending on who you're pitching to. Another challenge you have is that most investors hear a lot of pitches, especially if you're talking about VCs who are doing this for a living. They're seeing thousands a year. This particular slide, this photo, is a bunch of us from Western New York. Went to a conference down in New Orleans several years ago, and it was a huge convention center, and it was just filled with these booths of these companies. You would walk from one company to another and your head would spin because it was all kind of the same thing. And it was such a pleasure when you would talk with somebody who was really being able to relate to you and communicate well. So even though they may not have been the best companies and the best opportunities, the communication is so important. So I want to just kind of walk through a little bit about, about the presentation. So, again, the objective of your presentation, you're probably not going to close the deal, when you first meet with somebody for 20 minutes or 10 minutes or a half hour or an hour or whatever the case may be. So that first, pitch that you're doing, you're really what you want to do. You want to establish credibility. You want to demonstrate that, you meet the investor's initial criteria so that they're going to want to spend more time with you and dig deeper and get to that next meeting. Just kind of like, with sales training, the objective of a sales call is to get to that next meeting to keep the process alive. So I like to say that, your first meeting is you're trying to get the investor to invest more time to learn about you. They're not necessarily going to invest money, right off the bat. When you're developing your presentation, try to find out as much as you can about who you're going to be meeting with, so you can tailor that presentation to that target audience. Understand what the expectations are. Is this going to be a 10-minute meeting? Is it a half hour? Or have we got 2 hours together and we're going to do a deep dive? It's important that you understand that up front so that you can make that meeting most effective and meet the needs of who you're going to be meeting with. Most companies have multiple versions of their pitch, depending on who they are pitching to. So that's important to know. And most companies also, their pitches evolve over time as they learn. They start to hear the same questions over again, or they start to realize that certain points they're trying to make aren't clearly understood. So, the pitch is kind of a living document that's under continuous improvement and refinement. Another key point is who on the team will be making the pitch. That's something you want to figure out, because sometimes the CEO or the founder may not be the best and most effective presenter from a presentation skills standpoint or from a diction standpoint or whatever the case may be. So even though the key people need to be involved, they don't necessarily need to be that front person who's delivering the pitch. And then certainly you want to practice so that you've got this thing down cold when you're in your meeting with folks. Your typical audience, it varies. So that's what, obviously you need to know who your audience is. But if you're talking in kind of like, the angel world or even, the VC world, many of them aren't technical unless you are, focused on an investment company that does specialize in your industry. Most of them have opinions, so you may have to deal with some biases that they're bringing into this meeting. Most of them are also they're focused on the business. And if you're doing a technical presentation about, the product, and that's not what they're expecting, that could be a problem. And most have limited time. So you need to make sure that you're getting your point across effectively in the time frame that they have to work with you. So one of the things I like to say is I call it the 3S rule. So you need to be succinct. You want to be specific in terms of not just kind of talking in generalities. We're the best, we're the fastest. People love us. We've got all sorts of vague kind of claims. So be as specific and if you can be numeric and possible, that helps to show that it's real and support your statements. Again, if you're going to make statements about being better or faster or having lots of customer interest or we've got a great team, support that rather than generalities, because we hear generalities all the time. So you need to make you need to prove yourself and again stand out from the rest. For just an example, kind of you be the judge. You can say, our educational software helps students get better grades and be more engaged. That's good. Okay, those are good things, but everybody kind of says that if you're in that industry. So, you might be able to, say it more effectively by saying, an independent test sponsored by the U.S. Department of Education, our educational software improves students' grades by 7.5%, and students use our software 15 minutes more per session than the current software. It's a more effective way of getting your point across. It shows that you're not just kind of hand waving and making stuff up. You're backing up what you're saying. Similarly, we have the leading online marketing tool, or you can get into specifics. 5 times more sales for people who used our product. And we can make that happen because we have a proprietary algorithm. This is how it works. Another rule, and this is not, this is made up by Guy Kawasaki of Garage Technology Ventures, who's a well-known, very successful investor and kind of educator of startups. He uses the 10-20-30 rule. So if you're going to do a 20-minute presentation, he suggests that you have 10 slides and no less than 30-point font. And the reason for the font size is there's a couple reasons. Number one, if the font's too small, people just can't see it. I mean, if you're in a group setting and somebody's in the back of the room, they can't even read what's up on the screen. And also, the 30-point font means it's putting a limit on how much text you can put on that slide because the slides need to be easy to read. So, many times the most effective slide is just a picture. It's not full sentences and deep statements and thorough content. So, another rule to keep in mind when you're doing your pitches, this 10-20-30 rule. Now I'd like to dig into the basics of your typical presentation. This is stuff that if you Google formats for pitch decks, it's all pretty much the same. Sometimes the order is a little bit different, but the general content is the same. So this is sort of a pitch deck 101. So you've got your cover slide. You want to make it look nice. Your company name, your logo. So especially if you're pitching say it's a competition where there's going to be one after another, you need to be remembered. So, do something that's visually pleasing. Your name is easy to read, and your contact information customized a little bit, who's the audience. And, one thing that's helpful right off the bat is your tagline or that one-line description about what your company does, because way too many times, a company is pitching and they're 5-6 slides in, and the audience is at least in their head still thinking, so what the heck does this company do? So having that nice succinct description, one-liner to get it started and set the stage can be very effective. Typically, you want to start with the problem or the opportunity so that you're not viewed as being a product looking for, trying to figure out if there's a need, that you develop something that's meeting a big and painful, important need for some defined audience, who experiences that pain and is willing to pay for that solution. So, establishing the problem is important. Don't go overboard. I've seen some presentations where they spend half the presentation, beating the problem to death, and they really never get around to talking about why they've got a solution for it and why there's a business behind that solution. So, don't overdo it, but setting that stage that there's a big need that you're filling is very important. Then you establish that. So here's my solution. It's our product, it's our service, whatever we have. It's got to be clear and simple so that folks can understand it. Don't assume that they know your industry and that you know your technology. So make it clean, simple. Pictures or diagrams can be very helpful in illustrating. Make sure you make that connection about this is how it solves the problem. Don't assume that the listener is going to know that. And keep it short. What are the key features, the key benefits? No technical jargon. Oftentimes they say, this is what if you're going to explain this to your family at the Thanksgiving dinner, and they come from a variety of backgrounds, use in terms that they're all going to understand. Then, what makes us special? What makes us different? What's that underlying magic? Is there a technology or why can't anybody do this? And so, is it unique? Again, you can't be digging down into, the depths of technology or details, but also, if you can show, yep, not only is this an idea or a concept, it actually works. We've used it in the field, customers are buying it, or, we've got testing or whatever the case may be, but, you want to show that that's the case as well, so that people aren't kind of guessing and trying to figure out, is this vaporware or is this a perpetual engine machine that that really doesn't work. And how do we defend this? Is there actually, do we have patents or copyrights or trade secrets, or is it really just business model and we need to run faster than everybody else because there are going to be copycats out there, but we're going to be got there quicker, a more effective business, and that's going to keep our competitive edge. So you've kind of set that stage. There's a big problem. We've got the answer. This is great. Is there a business here? Is there a business behind that? So, talk about the business model. How are we going to generate revenue? I think there's, Kevin O'Leary from Shark Tank, his typical question, is, so how do I make money? So that's what investors, at the end of the day, that's what they want to know. So, you need to discuss that. Is it, are we going to license this out to someone else and they're going to take this to market? We're going to joint venture. Do we need contract manufacturers? Talk about high level what your business model is. So an example of the numbers, oftentimes people will say, well, tell me about the unit economics about this. So if it's a product or service, it's kind of easy. We sell it for $500 a unit. It costs us $250 to make. We've got a gross profit of $250,000. With fixed cost of $250,000. If we sell 1,000 units, we're at break even, and after that, we're in the green. If it's software, usually it's a little bit different. People will ask about, what's the ARPU, the average revenue per user, and how does that compare with your customer acquisition cost? Because software, once you've developed it, it's almost kind of free. You've sunk that cost in, and now, once you start selling, there's very little cost of goods sold. So, people look at it differently at those economics, but they want to know, kind of the lifetime value of a user. So these are key metrics that most investors are going to want to see, and they're going to vary depending on the type of industry that you are. But you want to know what they are and be able to discuss them. Things don't sell themselves. You got a great product, you can make money at it, but how are we going to get this out to the marketplace? So you want to talk about your go-to-market strategy. Who are we targeting? It's kind of hard to sell something to the whole world. So particularly if it's a physical product or a service. So who are we going to focus on? At least initially, because we've got limited time, we've got limited money, we've got limited resources. What's that plan to get into that marketplace? The people who want to buy it, how do we communicate to them so that they understand and that they're ready to buy? One tip, never kind of say the product will sell itself because it's so good, or we only need, the market's so big, we only need 1% of the market. Those are things that are statements that turn off investors very quickly. So you don't want to say that. One of the things that investors look for, because we see a ton of great ideas, and a lot of them make sense. And the things that have worked out or have failed to work out the biggest failures were often the ones that we said, this thing can't miss. It's obvious everybody's going to want to buy this product, and for some reason they don't. So because of that, many times investors are looking for evidence that you've got validation. That don't just tell me that people will buy it, show me that they are. Sometimes you're too early. I mean, you don't have the, you need the money to make the product or to deliver the service. So you may not have that fraction track record of actual sales yet, but the closer you can get to that by saying, who have we spoken with? Our potential customers, and what feedback do we have? Do we have strong buying indications? Do we even have things like, purchase orders or letters of intent, whatever, to the degree that you can show that and demonstrate that you've engaged with the customer and you've got positive feedback, the better it can be. And again, the best thing is if you've got an existing customer. So, sometimes the most effective slide in a pitch deck is one that's got a bunch of logos of, big, very rich, well-known companies. And you can say either these are our customers or these are companies who are willing to buy. That's what gets the investor's attention. So again, going back to the Shark Tank example, usually one of the first questions after the company comes out and, tells about does their little shtick, they'll say, so how many have you sold? And then, sometimes when it's, oh, we've had $10,000 of sales in the last 2 years, then there's the kind of that wah wah music when the investors are no longer interested. So it really, sales separates ideas from really being a business. So just an example, if you want to move from, we believe that people are going to buy, to having, we've done some industry studies and we got some market data. It's better than just kind of, we think they're going to want to buy. Even better yet is getting customer feedback. Even better yet is getting, more than just feedback, but, letters of intent or what have you, and ultimately sales. So you want to be moving along those lines, all the time to prove and validate your business opportunity. Competition is key too. It's so important because there's a lot of great ideas out there, and most people, somebody else has already thought of that idea, and they may have even tried to execute on it before. So, discussing, showing that who your competitors are, both direct and indirect, is very important. And how are we truly different? And hopefully, it's from our engagement with customers who are telling us that or demonstrating that, rather than, you're kind of, we've analyzed the other guys, and of course we're better, because there's obviously a bias there. So, and sometimes you're competing with just the status quo. It takes a lot for customers to change their behavior. It takes a significant advantage. So, it's really important that you analyze that, identify it, and be able to communicate that, and never say we have no competition. There's a big turnoff for investors again. So this Clyde and old Dilbert, behold my new invention, the likes of which the world has never seen. And then this happens all the time in pitch events. People Google, behold my Google search engine. That will find several existing products that do whatever that thing does. Crushing dreams since 1998. Happens all the time. So you need to be prepared for what will those Google results show, and be able to say, oh yeah, we know them, and this is how we're better and different. When you're presenting in your pitch deck, there's usually a couple ways to present the competition. There's this quad chart is common. It's nice because it's visual. The challenge though is that you're only comparing two factors. In this case, it's affordability and whether it's online or offline. So it's oftentimes it doesn't state a very good case for you. Another way to do it would be just kind of this kind of a chart where you're listing various competitors and what are the key competitive differentiators: price, reliability, speed, what have you, and just kind of showing that. So it's tough to communicate, but you got to do it. You really need to understand your competition well and be able to make that good case. Another very important element is the management team, and in fact, sometimes it's recommended that you really lead off with this because you're establishing credibility. At the end of the day, it's the team, it's the people that are going to execute and drive the success of a business, and particularly when things don't work out as originally planned. And can the team understand that, and can the team be flexible and identify things that need to be done to overcome these obstacles and make it happen. So really, the typical team slide is pictures of people. It kind of shows this is where they went to school. Maybe it shows where they work. A lot of generalities. Again, this is where being more specific and tell me that what I led the sales effort of a company in a relevant industry, and I grew sales from $1 million a year to $25 million a year. That's pretty impressive. People are going to want to listen to you rather than I worked at XYZ company for 5 years and I was in the sales area. So you're really laying out what are those qualifications, and the results and the successes of the team are very important. If there are gaps to be filled, that's fine. You're a startup. People will realize that, and they'll actually appreciate if you say, you know what, we really don't have a good production operations person yet. So that's one of the things we're going to be doing. When we raise this money, is filling that gap. Also, we're not, we as a team, we don't know everything, but what, we've got a good board that plugs gaps, and we've got good advisors, and we actually use them, and they're engaged with us on a regular basis. Those are powerful statements that will make investors comfortable in the team, which is such an important part at the end of the day. It also helps that, if you have made a financial commitment to this business, you believe in it so much, or your friends and family believe in it so much, that they're putting their money behind this. Make sure you make that point, because that's a sign of true belief and true commitment. That if it's just a matter of, we're getting paid, but when times get tough, we're gone. Investors, they see through that. I also want to talk about the stage of development. Where are we? What have we achieved so far? So far we've developed our initial prototype. We've taken it through to version 2 or version 3. We've gotten it into hands. We've done pilots with 5 potential customers and gotten good feedback. Those types of things. Talk about your accomplishments to date and what do we need to do yet? And particularly, what's the money? How much money and how much time will we need to get those done? Because that should be tying into the amount of money that you're looking for. How much are we going to get, and how long will that last us, and what will it get us to? So, something like usually a chart or a timeline to visually show that, it can be a useful way of presenting. Investors want to know your finances. Everyone knows that financial projections are just that. They're projections. They're based on assumptions. You're not going to hit them. But the importance of doing that is that, number one, this is a tool that you use to manage your business, and you change it as you learn more and the assumptions change. You change that so that, I like to really call it more of an illustration than a projection. But it's important for the management of your company, and it helps the investors to understand, how big do you think you can be? When do you think you'll become profitable or cash positive? Do you anticipate the need for additional financing? Will you be generating enough revenue and hopefully profit or EBITDA to justify a return on investment to your investors? And in some cases, do you even care about the numbers? Some founders don't even care about the numbers. So these are imperfect. They're never going to be exact, but it's important that you understand them and that you include them. So here's an example. Simple chart, because in your pitch deck, you're not going to get deep down in. Again, the 10-20-30 rule. But for example here, though, you've got a basic chart. It lays out a few years, number of customers, our sales, and it kind of ties into how many customers we have, our earnings before interest and taxes, or our net profit, how much money we've got, and how much our ending cash is. It just gives that snapshot picture, big picture, to help an investor understand, okay, at a high level, does it seem to make sense from a financial standpoint? And you've got your ask. What are our funding requirements? How much are we going to need? How much have we received to date? The general terms offered. Usually, you're not going to get up there. You're not going to negotiate your deal when you're doing a pitch, particularly if it's in a group setting. And are we going to be? Are we going to move the needle enough to have a good potential return for our investors? So an example of a slide, might be this. We've raised $300,000 so far from founders. We raised $600,000 from SBIR grants, or a government grant that funds research and development. We're looking for $600,000. We've already got $200,000 of that raised. That's a good thing. If you have a raise, you already got some money in the bank from investors. Be sure they know that, because they tend to be followers. We think we got if you've already raised, you can talk about what your valuation is. If not, you can give a range. This is what we're going to use the money for, and this is what we expect. We expect we're going to need another round in the early 2022. Then you want to talk about the exit, and you can't predict, but investors need to know that you understand that investors need to get out, in a reasonable period of time, 3 years, 5 years, 7 years, that you're driven to build a successful business that will create value, and that you're going to be moving to either sell the company to another, through an acquisition, potentially go IPO, although those are rare. But that, investors, this may be your life's work, but it's not theirs. So, they need to appreciate that you're going to be, providing them with an exit and getting, a nice multiple of their money back in a reasonable period of time. And then, usually the last, usually there's not enough time for a summary slide, but if you did have some time, summarize those key points, just as those key takeaways, especially if you're in kind of like a group setting where there's a lot of different pitches going on. You want them to kind of remember, oh yeah, that's the one. They kind of checked off those initial boxes. I want to talk more to that company. And then certainly, if it's not a one-on-one meeting, if you're in a group session, they need to be, if they want to contact you, they need your contact information. So, how can they get a hold of you? So, that's the elements of the pitch deck. We can dive into some questions. You have them in a moment, but just a couple other just kind of key points. The pitch deck isn't the only thing. You usually have a kind of a little bit of a toolbox that if you're going to be dealing with investors. Your elevator pitch. It's that 30-second to a minute, really kind of high-level summary of the key points of your pitch deck, so that if you meet somebody in an elevator or in a room or whatever, they will say, oh, okay, I want to talk to you some more, because you've kind of hit some of those key points. So you got the elevator pitch, your pitch deck, usually a written executive summary, kind of 1 or 2 pages. It's basically kind of covers the same things, but it's something you can, if you're at a show or in a meeting, you can hand it to somebody. So now they've got that, and they've got that key information and how to contact you. Then if you make it to that next stage where you're going to really start, getting into deeper dive or due diligence, things like, a business plan, or at least various components that, kind of when they're compiled, kind of hit the key things of a business plan, which is more detail basically of the elements that you've already covered in your pitch, but just with more detail and more support. The detailed financial projections, and oftentimes there's other supporting information that you might have or that investors might want to see. So you're not going to have that in these initial meetings when you're doing a pitch, but you want to be prepared when they say, okay, hey, we want to do a deeper dive here, that you can provide that information to. Here's just I'll be glad to share this pitch deck with all of you, so you can. I've got some links here that a good example of how to do a good elevator pitch. A couple other funding process tips is do what you can to learn about investors in general and kind of how they think. There are a lot of good resources, and I've got some links so you can kind of really learn more about them. Take advantage of if there are local programs, at the universities or whatever entrepreneurship programs. The fact that you guys are gals are participating in Buffalo Startup Week is to your credit. You're learning more. Network and be seen. Again, when we get back to live action, be out there meeting people and getting referrals is important. It takes a long time. It takes multiple meetings. It's most investors, unless it's a very small amount, like okay, I'll throw you $10,000 because I like what you're doing so far. It's a process, and it's a long process, and you're going to get a lot of no's. You need to just kind of be persistent, listen, change if you need to, but not haphazardly, to make sure things work. Investors almost always co-invest with others, unless again you're looking for a very small amount. It's kind of a herd mentality. So you're going to be contacting multiple investors, but to the degree that you can try to help to coordinate the process so that they're working together from a due diligence efficiency standpoint and from a timing standpoint, that can be very useful if you can try to coordinate. Again, listen to their feedback. Many times the answer is not yet. It's not necessarily no, but it's not yet because you haven't de-risked it enough. You haven't been able to validate enough that they're ready to feel that the risk and the potential return are aligned. Some other ways to find potential investors, certainly direct contacts. Their electronic networks and platforms. Our group, the Western New York Venture Association. Again, I'll be glad to share these slides and these links with everybody. Some other resources that are good, and that's how to get a hold of me. Kind of threw a lot at you there, but I'd be pleased to answer any questions or address any comments or anything that you might have.
Thank you, Jack. That was some great insight you brought to the table today, helping others make a focused plan and creating the most intriguing and captured presentation. So really honing in on a tailored presentation. I think we all have that as a takeaway, and ensuring it's to a target market or audience. So thank you. That was wonderful. I did see Artist did have his hand up. Did you still have a question for Jack today? If so, you can just unmute. Yep.
Yeah. Hello. Thank you, Jack. I'm Melissa. I'm really sorry I was able to participate at the beginning this presentation. Yeah, my name is Artist, international student here at UB. I was participating in Launchpad incubation trainings to preparing exactly the pitch for what you're explaining. So I'm really sorry that I didn't saw anything from beginning. I hope I will receive presentation to have option to see what you saw at beginning, right? That's the first question. Yeah.
Yep.
Okay.
Yeah, I would take his contact information and perhaps he can email it to you. So definitely take a snapshot of the information.
Okay.
Yep. Reach out to me and I'll be glad to send it directly to you.
One more question, can I?
Yes, yeah. Sure.
So the second one is I have already I will explain. I have an interesting. I'm a father of two sons. Very short my pitch, elevator pitch. So and we had big problems with how to handle the after, like in maternity leave, in my wife's maternity leave, like how to handle the stress and everything right after the baby was born.
Mm-hmm.
So and when we come up, we find solution like with some simple, useful, reuseful, small accessories. What helps during the caring period, like in the beginning. So and actually, when we start to sell it them and to produce and sell to others. And now we grow up, like we already have more than 6,000 customers here in the United States, like private, like B2B customers. So and we want to scale up because we find very interesting way how those products could be very relevant for users, for the mothers and new moms. And now I'm looking to establish the company and do everything that I can like to start to operate here in the United States. And now I'm a little bit confused that how I can do that faster, to go right now to the venture capitals to find financing my project, or I need to go step back and start participate in some local incubators like cultivator or something like that to have some kind of more evidence that this works or yeah, but still, yeah, this is my question.
Yeah. I mean, I think it's well, congratulations on you've identified a need and you've a solution and you're starting to you're showing that there's traction in the marketplace. So I think that there are multiple types of funding, depending on the nature of your product, the potential size of your market, because, for instance, if it's venture capital, they need to see huge market potential and need to make significant multiples of their money back because they're investing in high risk opportunities. If you need a relatively smaller amount of money and it's not as much of a risk, there may be, it's probably not a fit for venture capital, but it could be even potentially, depending on how much traction you got, there could be a loan. There are some loan programs and loan guarantee programs, or people are having success on things like crowdfunding. If it's the type of product that a lot of people can relate to, they might decide to either contribute to your a crowdfunding campaign because they'd love to see this product get to market, and actually you can even generate sales that way, where you kind of they give you the money and in exchange, there's their reward. They're going to get your product. So at this point, exploring kind of the fit of what your funding requirement is and the nature of your business with the different potential types of funding would be something you'd want to do up front. And then once you've identified what types of funding might be appropriate, then again you're kind of catering, what's my story, what's my pitch, what's my offer, to fit the criteria for these different types of funding sources.
Thank you, Jed, for your answers. Just one, but most important in my case, how I can understand, how can I focus on what exactly I need to go for?
Mm-hmm.
Because do you see any kind of or do you have some kind of examples how I can evaluate that which of those
there are multiple sources. So you said you're involved with the university right now?
Yes.
So UB has their Blackstone Launchpad. Are you familiar with that?
Yeah.
So they're a great resource. They've got mentors and that a lot of good information. So I think that would be certainly engaging with them and having setting up some consulting sessions to to have those discussions with them. If your product it sounds like it's more kind of a consumer product. So
yes.
There are the small business development centers. They are supported by the U.S. Small Business Administration. There's one at Buffalo State College. There's one at Niagara Community College. They have counselors that can work with you, and there's no charge for their services. So you can look into that. And then also, I'd offer too. I'd be glad to have a follow-up. I don't know if at this point you have a, kind of that pitch, a pitch deck or an executive summary or elevator pitch or whatever. But taking it offline, be glad to have a deeper conversation with you as well.
Oh, that would be really absolute. I would appreciate if you have some additional time to talk with me. I would be really happy because I already in contact with UB. I already used almost all mentors, even for twice prepared pitch deck. I did everything. So I even used free resources of the local to develop, to establish the company. And everything is ongoing, so just I need to understand which is right strategy for me to go faster to start to operate here. Because
it's interesting. You're in a situation where you're learning a lot. You're getting a lot of information, and I like to refer sometimes it's entrepreneurs get mentor whiplash because I might say one thing and another mentor would say something else and another would suggest something else. And there might be, there's elements of truth in all of them, sometimes, but it is up to the entrepreneur though, to evaluate all this information and kind of filter it and then say, okay, what seems to be the best course, the most appropriate course for me to take.
Yeah, Okay, I guess that I can write an email to you and
Right,
have some kind
right.
of additional, yeah. So could like
Yeah,
to
I'd be
call
glad
you.
to.
Or, yeah, that
Be
would be
glad to.
perfect. Yeah, would be very glad. Okay, thanks.
Thank you,
You're
Artis.
welcome.
One question for you, Jack. So I'm looking to, I asked this to some of our panel guests, but what would you tell your younger self, or what advice would you give your younger self for persons or attendees like we have today that are interested in this area of the industry? What advice would you give? So like one of the examples you gave in your presentation was not now doesn't mean a hard no, but it is something that I think some of us can take away and understand not to give up, or what
Right.
piece of advice would you give?
Yeah. Yeah, I think well, one piece of advice is that your initial idea probably isn't the one that's going to be successful. Entrepreneurship is sort of a process where you learn. It's gathering information and testing and learning and then acting based on what you've learned. And sometimes for some that initial idea is the one, and that's wonderful and that's great. But many times it's not. So just having that constantly that sense of learning and testing, and then taking hopefully actions that are a little bit better than the previous ones. And sometimes it means you stop the first idea, you give up on the first idea because it just it's not going to work. But move on to the next one, because especially if you're your younger self, you got a long way to go. There'll be many opportunities ahead. I do also, and I know sometimes the university programs might not appreciate that I say this, but sometimes it's helpful just to go out and get a job first, because you're getting work experience, you're making contacts. Hopefully you're building up a little bit of resources too, because usually the founders need to put some money in, have some money to put in this as well. So there can be great value in kind of on the job training while getting paid by somebody else.
Thank you. And do you have, I know you left a slide up with a bunch of resources and links, but do you have any personal reads or resources that you recommend today?
So Launch New York is an organization here. They serve the western, central and western part of New York State. They have they're a venture development organization. So they work with companies, the companies that fit their criteria, meaning dedicated founders and the potential for high growth. They'll assign an entrepreneur in residence, a mentor, and kind of work with these companies through a process, which could lead to some initial funding from them. Not always, but it could. So they've been, they're the most active early stage investor in Western and Central New York, and they've got a good portfolio of mentors that can work with you as well. So they're a very good resource that I would suggest. In terms of I mean, everybody's kind of got their own. I mean, I like Joseph Martin Zwillig, his blog, Startup Professionals. I like him because he's very practically focused in his approach. So he's kind of a so I think he'd be a good one. But there's a lot of good ones out there, and I think just start just reading and learning, and subscribing to the blogs and what have you, because you can get a lot of knowledge that way.
Absolutely. Well, I think we're a little early, 9 minutes before the hour, but I do want to thank you once again for being a part of our Buffalo Startup Week, as well as our attendees today. We truly appreciate that. I think you brought some wonderful insight to the table, the virtual table today.
Very welcome. Very welcome.
Yes.
And follow up. I'd be glad to have a follow-up conversation with anybody. So, please feel free to, send an email and we can schedule some time.
Sounds good. Well, thank you once again, and you all have a wonderful rest of the evening. Take
Thanks.
care. Thanks so much, Jack. Take care.